If you're a Shark Tank India fan like I am, you'd definitely be knowing the investment strategy being used by all the different sharks to analyze and know about the companies. For example, Namita likes to take safe bets, Aman likes to invest in entrepreneurs in which he sees the hustle, and Piyush likes to invest in tech companies. But deep inside all of these layers, the final decision making comes definitely into the numbers. So in this video, let us see how you can invest like the sharks in Shark Tank. Find out the good businesses in India which are listed along the same lines of the same thoughts that they are doing. Try to shortlist the number of companies using tools like Screener and identify good opportunities inside them to invest. This is Ajay Ajit. Welcome to Market Feed. So first, let's break it down. The quantitative things that the founders look into and the qualitative things that they look into. Again, you can use a similar framework while investing in large public companies as well. So the first thing they ask about is what is your revenue? And through this, the sharks try to find out how has been the revenue performance of the company and is it showing a good indication of growth. Then they try to find out the unit level cost of each of their goods. But for a public company, that is not easy to find. But a metric like your operating margin, which is EBIT, earnings before interest and taxes divided by your total revenue, it will help you identify what is the real margin of the business they are doing. Then they also look at the market size or the potential of the industry that this company is focusing in. They also look into numbers like EBITDA and EBITDA growth to try and understand how fast the company is growing. So yes, very much quantitative factors are the core of the decision making, like revenue growth, EBITDA growth, profit after tax if the company is very profitable. Then also looking into the market size in which the company is playing in. And then in the quantitative analysis, at the end, if they are satisfied with all of this, they also look into the valuation. That means, should the investment happen at the current levels that the founders or the valuation that the founders are asking, or should it be at a lower scale? It is purely about negotiating price, especially because in a startup world, the price discovery is so much more difficult than in our public stock markets. They really have to negotiate the price. They have to look at a lot of very important valuation metrics to make sure they are not overpaying for the business. And next, going into the qualitative part of the business. In this part of the analysis, they try to look into the founding team, the promoter team in the case of a listed company, what their vision is, how the team is performing, who are all the people taking the decisions inside the company, and how capable are they to take this to another level. They also try to analyze how much skin in the game that each of the founders or promoters have by looking at the stake that everyone owns. In the case of a listed company, for example, if you see that the promoter of the company is heavily selling the stocks over the last 6 or 12 months, that is definitely not a good sign. That means the promoters themselves are not confident about the company and its growth in the future. And also things like patents, the right to win of the company and its moat are also looked into. So basically it is a shortened or a very sweet form of a SWOT analysis that you see on live TV, right? SWOT is a strength, weakness, opportunities and threats. All of these 4 quadrants are what they're trying to understand in the brief 1 hour period that the shark is trying to understand the company. So first, let's try to put all of these numbers, the quantitative factors down into paper and see which all are the companies which we can shortlist in India according to that. So just like the video where we found undervalued stocks in India by using the Benjamin Graham method, we are using the same screener tool here. Again, it is not a paid collaboration, not a paid advertisement, just using it here because it is such a damn good tool. So coming here, first we'll try to go over each of these rules that I've written down. So first, the market capitalization should be greater than 1000 crores. So why I have included this? If we do not do this, maybe we'll get a lot of unwanted or unnecessary microcap stocks. So not going into that, right? And the next one is OPM, which is operating margin. Operating margin should be at least greater than 20%. That is what I've written. So if you remember the operating margin formula, it is EBIT divided by revenue. So here the higher the number is better, but I've given a number as 20% so you can get a gist of it, and it will filter out most of the good companies. And after that, I've given a profit growth greater than 30% rule. So here if you're looking at the rules of profit growth the function, it says that TTM profit growth of last 4 quarters is higher than 30%. That is what I've given just for perspective, right? TTM means trailing 12 months. So in the case of you doing analysis when the financial year has not ended, you can use the last 12 months data to analyze the company. That is what is called as trailing 12 months. So again, that TTM, last 12 months data, is being compared to the previous 12 months data, and I want to see a profit growth of at least 30%. What if that number is not enough? I've added one more rule here which says that profit growth over the last 3 years, right? Again, in the last 12 months there could be something extraordinary happening in the company, that's why their profit increased by a lot. So I've added this extra rule which says that profit growth over the last 3 years compared to the previous years should be greater than 50%. So all of this definitely will ensure that this company is growing at a really good scale. And the next thing I've added is actually from the qualitative part that we discussed, where the promoter is having good stake in the company, not adding promoter stake greater than 50% or anything. It can be added, but it will reduce their options, right? For example, ICICI Bank, they do not have any promoters at all, but they are still a really good bank. Companies like ITC, L&T, and even HDFC Bank, they do not have any promoters. So here I am trying to optimize here that if there are promoters over the last 3 years, the promoter stake has not reduced by more than 3%. That is the rule here. And coming into the last part of the scanner, price to earnings less than 20, right? This will again ensure that you are getting the stock at a really good valuation. So the company is growing over the last quarters, and over the last 3 years, the operating margin is good. It is more than 20%. Then you can see that the promoters really have good stake in the company, and that the company is not overvalued as well. This is the gist of the framework that they try to take in while investing in any company. Even you can do the same thing with these screener rules. So yes, going ahead and running this query, we get nearly 17 companies with these rules. Again, these rules can be modified to your liking. I'm just introducing this to you as a tool so that you can understand the power of it and try to use it to find out good stocks which you can invest in. So again, going through the list of stocks here, the first ones that we see are looking very interesting. The first one is Share India Securities, then there is Master Trust, Shriram Pistons, Adani Power. Yes, Adani Power has had a massive increase in profits over the last 12 months, and I'm sure that it would be coming in a lot of your radars right now. So we see the profit growth and the valuation it is at. So now that we got a list of all of these companies, you have to go through each and every one of these one by one, or you can sort it according to your liking, right? If you like large cap companies only, you can click on this market cap icon here, and it will be sorted according to the large caps. And you can see that ICICI Bank is one of the companies where there is high profit growth, where there is high operating margin, and the stock is not that overpriced when we look at the PE ratio. But one warning here, when you're doing this analysis, each sector or industry will have their own nuances. For example, first I thought I'll try to go after companies which do not have much debt, but naturally any financials company, like even the best companies in the financial sector, they will have debt in their books because of the way they are structured. So you will miss out on all of those opportunities. And here the best way to analyze a finance stock is not by using the PE method, but by using the price to book value ratio. So make sure you try that out as well. Here I am going to add a new value here. So here I've given price to book value lesser than 6. Even that is a high number. So just putting it here so that you do not get extreme companies in the financial sector inside the screener here. But make sure, as I said earlier, you try to stick to a sector, try to do the analysis on that, and then come up with various screeners on how to analyze them. So out of all these, I've selected the stocks. So once you find the screen, you can individually click and open each of these stocks. You can see the pros and cons of each of these companies, right? The pros of ICICI Bank is the company is expected to give a good current quarter. The company has delivered good profit growth of 34.6% CAGR over the last 5 years. But if you're looking at the cons, right, as I said earlier, you have to look at the price to book value of a financials company. The stock is a bit overpriced when you're comparing it with its peers. The company has low interest coverage ratio. Again, this is a financial stock related term. But then if you want to scroll back above, you can here see the chart here, right? So by default, this will be in the PE ratio. And if you go to more and you select this price to book value here, you can try to understand how overpriced or how the PB ratio has been performing for the stock over the last multiple years, right? So when I go into the 10 years chart here, I can see that in 2019, just before the COVID crash, the company's PB value was 3.1. Currently, it is at 3.5. So it is a bit more expensive, but then has not rallied by quite a lot. Even though the company has moved up the earnings, the company's book value, all of this has increased along with it. If you scroll down even further, you can go through the last multiple quarterly results. You can see that the revenue from December 2020, when it was at 22,200 crores, right now it is touching 40,000 crores just in this last December quarter. You can see that the profit before tax and the net profit is also significantly increasing. It has gone up from 6,000 crores to 11,500 crores. Getting into India's largest bank territory, right, might be a threat to SBI and HDFC Bank in the future. So have a look out for that. So similarly, you can go into each of these stocks and try to analyze. You will get a gist or a summary in the first page. Then you can go down, you can go to the P ratio chart, you can go to the price to book value chart and the last multiple quarters and the last multiple financial year performance as well. Once you're satisfied with this, once you're satisfied with the numbers, what you have to do this is you have to open the annual report. You have to see how much the promoter or the management team has faith in the company, what their vision, their long-term vision is for the company and their upcoming plans for it as well. So the next interesting stock that I found was Adani Power. So the company's profits have shot up through the roof. If you're looking at the numbers here, again, we'll quickly open it up right here. So if you're seeing the net profit numbers over the last 12 months, again, the TTM, trailing 12 months, you can see it is at nearly 23,000 crores. For such a large cap company to double its profits over the last 1 year, it is no joke. And right now, if you're looking at the P ratio of the company, it is undervalued. I can't even imagine a world where I'm calling an Adani stock in 2024 as undervalued. And if you're concerned about corporate governance and this is genuinely not your investing style, I would suggest you can stay out of it. And there are other interesting stocks which caught my eye. So out of all the banks, the one that I'm looking into definitely is ICICI Bank. Have a lot of exposure to it through my mutual fund portfolio already. You might also be having it, right? And then Canara Bank also looked interesting to me because I've been tracking the stock price for a long time and I've had a swing position in it as well. So other than that, it's mostly NBFCs and banks in the first layer of it, other than Adani Power. But in the next layer, you can see when you're going into slightly smaller companies with 7,000, 5,000 to 10,000 crore market cap, you can see that Shriram Pistons is here, Share India Securities, and then AJA Greenpack. So you can go through all of these companies very much in depth. And if you want to understand how you can analyze a company very deeply after doing all the primary fundamental checks, if you want to go into their annual report, read it and understand it, you can check out this series of videos here which help you understand how exactly to do or fundamentally analyze a company in the market. So that is just us trying to put some numbers behind the logics of the Shark Tank investing method. Whatever they're doing in the private market, the private equity market, we are trying to do it in the public market here. If you like this video, make sure you like it and hit the subscribe button. This is Ajay Edith signing off. See you again in another video. Bye bye.